If you are struggling to find long-term consistent results, I'm going to give you 4 things to master in this video. And if you do, objectively, you will be a much better trader. There's going to be a lot of words on the screen. Don't let that make you lose focus. I'm going to walk through and there's going to be pictures every other slide. Now, the first thing that we need to focus on is the thesis. The ability to process information objectively and know which levels and things to look at objectively to build a thesis for the day. A thesis is what's going to allow you to build consistency because the thesis is built off of repeating market behaviors that show up over and over again. A thesis should consist of an objective market given information which tells you to look for certain things. Things like the previous day's high, the previous day's low, the previous day's close, the high and low of the current day, high and low of the previous week, and even the high and low of the current week. A scenario for what could happen based off those details for a long or a short situation. Every single day that I go into the market looking at different instruments, I look at that pair and say, hey, this is what the market has done. The market only does 3 things. This is the signal it has given me. And based off of the levels and what the market has done, this is what a long would look like, and this is what a short would look like. Now, I'm not necessarily prepared to take both of those. However, I don't want to be surprised if certain things start to occur. Let's say that I want to go short and the market keeps making higher highs and higher lows. Now I am prepared for that and I understand why the market is doing that. And I don't necessarily feel obligated or kind of that fear of missing out to take one side or the other. I'm patient and I wait for what I needed to see in order for me to execute a repeatable trade setup. A reason or reasons why you should stay out of the market. That goes into number 2, which I just talked about. A thesis should be directly related to your playbook. I have a list of setups that I am looking to trade, and I have listed out the different scenarios for that type of trade. So that way, whenever one of those scenarios starts to play out, I know exactly what to look for because it's repeatable and scalable in size. Now, I made my playbook using Microsoft OneNote. I'm sure there's other programs out there that can be used, but it could or should maybe look something a little like this. I have a situation for trend trades, markets that are breaking out or breaking down, making lower lows and lower highs, and I know exactly what to look for based off of the scenarios on what to do when that occurs. So for example, we had a market that was going up and then we start breaking out to the downside, and I need to know what to look for on this day, maybe on this day over here, and so forth after this day closes. So let's say that this day closes, I should already know based off of what has happened over here, day 1, 2, and 3, or excuse me, day 1, 2, and then how this day has closed, what I am going to be looking for over here, what I would want to see if it was a trend trade, and what I would want to see if it was a reversal trade. So kind of like you just saw in that playbook, based on the information given to me by the market, I am going to look for the market to do one of the following. So if we're looking at this example, I've listed out a couple of details. You don't need much. It's just objective information, and the market only does 3 things. So I'm looking at that information and saying, okay, we closed the market in breakout to the downside. What do I need to look for over here? So let's give 2 situations. The market is in breakout to the downside. So maybe I am looking for a pullback to sell back down to the low of the day, or maybe even down to the previous day's low. At the time of recording this, it is March 12th, 2025. If you go look at all of the indexes for today, you're going to see that pattern. And that's exactly why I'm looking for these. The market or a lot of breakouts tend to fail. If the market makes a higher high on the day and pulls back into my session, it could be setting up for a short squeeze, maybe going back for the money to go back for this previous day's low. And there are going to be instances where I would be willing to take that trade if it sets up appropriately. If you're like me, like free stuff, make sure you're commenting down below to enter into this month's giveaway. It could be anything, a thumbs up, nice shirt, chicken, sandwich, it doesn't matter. Let's get back to the video. So after I have built a thesis, it's now time to go into the day and start watching price action to see if my trade setup is going to show up. So patience is arguably the largest contributor to overtrading, fear of missing out trades, and possibly even going into tilt. Because a lot of people who maybe lack patience, there's a high probability that they just don't know what they're looking for on the day. They haven't built those good, if the market does this, I will do this statements. And they're just sitting there aimlessly staring at candles bob up and down, and every fast move or every large candle makes them want to take action which tends to lead to that overtrading, fear of missing out, and going into tilt that I just said. So when I go into a session, I really like to go in with very low expectations. I don't feel like I see anything. The session's about to begin. I could say, hey, this chart's trading very cleanly. I know where my levels are, and this one has a probability of a trade occurring, but I don't necessarily feel like there's going to be something on that given day or on that pair until my entry criteria starts to play out, and then I can focus in on that instrument. I always observe things according to my playbook and according to my trading plan because I am looking for very specific things. And if those are not showing up, I don't want to be trading movement or anything like that. I only want to trade my setups. I always have a set in stone entry criteria, a list of things that need to take place before I click the entry button. And you're about to see the picture of that in the next slide. And I have spent hundreds of hours studying price action, really to come to a very simple conclusion of how to enter into the market. So hopefully my entry criteria will save you all a bit of time if you choose to replicate it. Before the session begins, I always know what needs to happen before I execute that trade on that instrument and before I start watching price action on the day. Continuing on with the example from the thesis, the entire slideshow today is going to be that one example. I'm going to walk you through thesis, observation, execution, and then management all on that same example to just try and give you a good example of going through these 4 steps. So looking at this example here, when the session is about to begin, I look at how the day is developing and based my thesis, based on my thesis, I start to plan whether I, have a trade forming or not. So one of the steps that I look for is structure. I look at the day and say, hey, this is what I'm anticipating, or not necessarily anticipating, but looking for to start taking place. Do I have details looking left that align with that and what has happened thus far? So if I'm looking at a day and I want to go short and I see, hey, we've been making higher highs, they've made a lower low on the day, that's probably going to be step 1, and they've gone back to the high and failed. Let's observe price coming into the session because there's a possibility that my trade may be taking place. Is my entry criteria playing out? Yes. Step 1, breaking down. All right, the session hasn't began yet, but we've made that lower low that I need to see. So let's see what happens over here. Is there news on the calendar? If there's news at 10, normally I wait until after the 9:30 open, but if there's news at 10, maybe I need to wait until after that news plays out in order for me to, actually get into a good trade and not get into the consolidation or get into the trap prior to the news. Is it a clean chart or is there a lot of chop and wicks? So this consolidation here is a pretty choppy place to be entering in. So I would definitely need to see a more clean price movement back up to the high, or even some kind of breakdown pullback in order for me to enter in, and then targeting low of day or previous day's low. But I need this chop to give me a much more clear entry before I'm allowed to enter into that. If there's lots of wicks, if the market is ranging between a high and a low, those are the types of places that I'm really trying to avoid. All right, so we've made it through my observation phase. And I'm about to execute because my entry criteria is playing out. What do I want to see before my entry? Price action, time, news. These are some questions that I'm asking myself. Is this a repeatable process? Yes, absolutely. So let's go to and look at what that repeatable process is. So number 1, we were making higher highs and higher lows. From the previous, in the thesis slide, remember we were in breakout to the downside and I was looking for a potential or a possible trend opportunity back down to the previous day's low or maybe the low of the day, depending on how Monday, this day right here, has set up. My entry criteria is very simple. Number 1, we make the lower low. That's step 1. We were making higher highs, and now we've made a lower low. Then I need to see it go back and retest the high in some form or variation of 3 pushes. That 3 pushes could have turned into a lower high, and then the market could have rolled over in London. It could have made a lower high, and then into New York, we tried to go back to the high and rolled over. Or in this case, they went back to retest the high, they broke through the high, and then the high failed, and it's now consolidating back underneath. And then again, going into the session, what price action do I have? Notice how we've started to go back up to the high in leg 1, leg 2, and then this leg 3 to retest, and then immediately it breaks back down, goes sideways, and then there's follow-through continuation into a very specific time of day, which is 9:30, the open. So let's go back. Break in structure, lower low, step 1, 3 pushes back to the high. Step 2, now I'm in my session, and we retest the high again in 3 legs and break down. Okay, now we're looking for an engulfment, a bar that breaks down at my certain time of day, in this case, 9:30, and that is this bar here. This bar is a bar that closed outside of the previous bar's range. It is a breakout bar, and then the next bar breaks down and goes sideways. I don't like to chase price. I like to either on a lower time frame on a 1 minute chart, wait for a pop-up, and then on the engulfment of that pop-up, usually it's some kind of 3 push pattern on a 1 minute chart, and then an engulfment. That's where I could take an entry, or I will put a sell stop 1 tick below this bar and allow the market to fall and pull me into that trade. And that would be step 4 for the entry. Repeatable. Go back and look at your charts. If you want to use this entry process, feel free. Just go and make sure that you, of course, you're studying it over and over again, so that way you can see it as objectively as I do. Okay, I'm in the trade, and now I need to put my stop in place. I need to figure out where I'm going to take profits, and I need to figure out what would need to happen for me to decide objectively that I need to get out of the market even before it stops me out at break even, or maybe it goes back and stops me out for a full loss. So once I'm in a trade, how should I be behaving? Do I set the trade and just walk away? Do I panic and start doing irrational things like close the moment it goes into profit, or move my stops whenever it goes against me? Maybe I'm moving it further away so that way I'm giving it breathing room, but in reality, I just don't want to take the loss. Or do I sit, look at the market objectively, and follow my original plan prior to entering? I always have a plan going into the trade so that I can manage without emotion. Okay, so coming into same example, again, you know, this is still that example that we saw in the thesis all the way through up until now. Step 1, after I execute, I follow my plan. Whatever I said I was going to do prior to entering is what I am going to do. And those things that I'm saying that I'm going to do are based off of my playbook. I'm going to put my stop loss wherever I'm supposed to. So in this case, on a lower time frame, this would be above push 2 within the pullback, or I like to just put it above the breakout fake out bar or the sideways consolidation bar. I'll put a little stop above that, and then target levels or sometimes expansions of a range depending on how this trade is set up. So step 2, get to break even. Sometimes I'm not just all in and all out at the level. Sometimes I'm in and then I'm out partially and then I'm holding for an expansion. So in this case here, maybe I took partials at the level and then get to break even and then hold for the expansion of that range. Step 3, exit the trade and assess performance. Every single trade that I take, I grade myself. I grade myself on my performance on entry, so execution, on management, on pair selection. You know, was I capable of looking at an assortment of pairs and then choosing the correct one based off of the objective information? So like today, for example, today is March 12th, 2025, and I was looking at indexes, and this morning I had analyzed that US 30 closed in breakout. So that was a pair that I really should be watching. And then I wound up shorting the S&P instead. Was the S&P incorrect? No. However, US 30 yesterday had closed in a better way, that it was set up better for the large fast move, and then that is what ended up happening. So I had to downgrade myself a little bit. My performance on S&P was still good. However, US 30 was still a better pair, so my pair selection was not perfect. So things like that. Those are like little things that I'll grade myself on. And like down here, step 3, exit the trade, assess performance. Did I execute according to plan, or did I deviate? Was the deviation due to something objective? What I'm saying here is, if I'm in a trade and I say, this is where I'm going to take profits, this is where I'm going to put my stop loss. And my stop loss is never going to change. However, my take profit, sometimes it'll come just short of my take profit. Let's say that I'm like 1 tick above and the bar is about to close. I will just close it, okay? I will close either the entire position or the partials like I had planned to, because I cannot tell you how many times I have not done that, and I have watched it come 1 tick away from take profit, the next bar opens and goes right back up. So if I'm like 1 or 2 or 3 ticks away from my take profit, from my first take profit, I will just close that partial or the full position, depending on, and then manage from there. Or maybe it comes down and goes into an extended period of consolidation and it's still very close to my entry and I have not been able to get to break even yet. Maybe the safe thing to do and the more professional thing to do would be the trade is not behaving how it's supposed to. I've got 3 pushes into a low or 3 pushes into a high, and they're not going any higher, they're not going any lower. That would be like a very objective way of me saying, hey, it's not doing what I expected it to do. There's still a possibility of it continuing, but the probability of them pulling back and putting me into significant drawdown has now gone up and it is no longer worth the risk. I would rather either close and reassess or just close and scrap the idea altogether. If I exit because of emotion, I grade myself lower. If I executed according to plan, I grade myself average or even slightly above. If I exit because I saw something, I read price action in live time and in that price action told me it was time to get out, I will grade myself even higher, because lifetime performance is what truly matters. And making those decisions in real time and doing it professionally and objectively is what I aim to do. So when I do that well, I want to, of course, grade myself accordingly. This video has been a bit shorter and very different from my normal videos. I wanted to do a bit more of a mindset video this time. So let me know down below if you have enjoyed this and if you found it useful. If not, please let me know that as well so that I don't do any of these in the future. I do appreciate all of your feedback going forward. I do hope you have a great day, and I will see you in the next one. Bye-bye.